All right, we are live in Austin, Texas, coming to you with this week's World Economic and Housing Market Report. There's so much going on in our world. It is just mind blowing. So, with that in mind, that was fun. I've got Mr. Mark Koretsky. Welcome.
Thank you for having me. Happy days.
Happy
There.
days. We are well into November.
I cannot believe it. I have no idea where 2022 went.
It that is a good point. It's well, we
The
have a
amount
few
of
weeks left.
times, the amount of times I said this year, 2020 is it's ridiculous. I still think we're in 2020 some days.
Well, it's your youthful outlook.
I wish it was. It's just time goes faster and faster the older we get. It's
It's
crazy.
true. It's true. Well, before we get to 2023, let's take a look at what's been happening with our global economy. We're going to talk. I have so many things I want to talk about. I want to talk about OPEC. I want to talk about the Austin housing market. I want to talk about Jay Powell. I want to talk about another pandy word that I have. Because I think we've gone from pandemic to pandemonium. And let's kick it off with the fact that the Austin housing market has been relatively flat when it comes to number of homes for sale. So we are staying in and around that 10,000 homes for sale mark, which is a good sign, I think. What do you think?
I think it's better than less when it comes to from a buyer standpoint and from an economic standpoint. But yeah, I mean it looks like not just for Austin, but for every market. It's what really we've been saying. We've been seeing an increase in inventory, and that is a blessing because we had absolute rock bottom levels of inventory. But at the same time, we're in a seasonal world, right? Real estate works around school. And so really the reason why we see the increases in inventory during the summer months is our kids aren't in school. And so it allows us to actually participate in the real estate market.
Mhm.
And so it always peaks and valleys throughout the year. And right now it's historically this is when we have the lowest levels of inventory.
Yeah, so we have definitely flip-flopped. And honestly, last year at this time, things were so different in our economy and our number of homes for sale, in attitudes of buyers and attitudes of sellers and attitudes of investors and attitudes of lenders and attitudes of builders.
And that goes to show you how much power and influence the Fed has with their ability to arbitrarily increase and decrease the cost of money, right? We had the cheapest money in the history of mankind over the last 24 months. And right now, we're dealing with the ramifications of that really cheap money and that inflation that it caused.
Mhm. Yeah, it was. I mean, it was unsustainable.
It was completely unsustainable, and it is the biggest disappointment for all of us that the Fed just ignored what was going on in 2021. What they did in 2020 and actually navigating those February, April, May of 2020, they did a really good job. Like hats off to them. They kept our economy, they kept the world economy at bay and humming. And then they kept believing and saying that inflation was transitory. And most of us knew that it wasn't. And so they just continued to let the money print. And then now they're going the complete opposite direction, right? Right now, what they're saying is we are going to continue increasing and tightening monetary policy until we have true proof that inflation is down. And we see both the labor market and the wage inflation that we're seeing come down, which means they're waiting for us to go see more Americans filing for unemployment and seeing more companies closing down. And so it doesn't make sense to me, right? Like we want to have a fair and balanced economy.
Mhm.
Right now, it doesn't seem like we have one.
Yeah, and we're calling this episode the tattletale episode, and I feel like you know speaking the truth in today's day and age is there's the global impact, and then there's the what's happening in my backyard impact of how all of this is working. And so taking it back right now to the fact, OPEC is doing what they're doing, and Jerome Powell is doing what he's doing, and the ripple is causing decisions for many buyers and sellers uh, in this quarter to be different than they may have been if this was just 2 years ago, pre-pandemic.
I think the quote that resonates with me most recently is the Warren Buffett of you've got to be greedy when the rest of the market and the streets are bloody, and you've got to be fearful when the rest of the market is greedy. And
Mhm.
so right now is an incredible opportunity to lock in prices for home ownership over the long term. It's not the best time for somebody that isn't stable, that
Right.
isn't really guaranteed employment, to take
Mhm.
a really big risk and overbid for a house, right? It's never a
Agreed.
good thing to overpay what you should. And so it's the like we talked about before, it's the tale of the two tapes. Now we're just telling you all about it.
Yeah, I mean, it's, a year ago at this time, people were willing to overpay for a house, sight unseen, pull all their money out of savings because people were sitting on so much equity. And today that has flipped, to your point. And when we look at the Austin, Texas market, just to quickly run through some numbers, because I think this is important for the folks that are tuning in. We had, like the week before, basically, we had 730 houses that went under contract. So that's 100 houses a day that went under contract in the past week. And we had 100, basically had 100 houses a day that went to sold status. So houses are moving. We've seen hundreds of houses with price increases. However, as we know, we've seen a whole lot of decreases.
We have, I mean, you and I talked about it, right? I don't know that you brought up the numbers, so run through those numbers.
Sure, I can definitely run through the numbers. So first of all, let's start with, I'm going to look at it a little bit differently this week. When we look at where the value is, because we're looking at how the impact of inflation is hitting our economy. So when we look at houses between 350,000 and 500,000, they represent in Austin, Texas, 31% of the market overall. And of those, 15% of those had price decreases. When we look at houses 500 to a million, that's 40% of our Austin, Texas market in total. So that's like 4,050 houses basically. In the past week, between 500 and a million, 30% of those, so 1 in 3, saw some type of price decrease. And the last number that I want to talk about is the houses a million over, and that's 15% of our market. And wait for it, less than 1% of those had price decreases in the last week. So what does that tell you, Mark?
It's just we're seeing the regular American hurting, and we're
Yep.
seeing a continuation of really the rich getting richer and the poor getting poorer, right? This is the reason why inflation and the best hedge against inflation is always going to be real estate and hard assets, right?
Yeah.
There
Mm-hmm.
is nothing better to hedge against inflation than a building that's never going to go away, with the cost of everything to rebuild that building skyrocketing, right?
Yeah.
Like that just makes perfect sense. And so when you have a significant amount of money, it
Mm-hmm.
it it grows quickly, and compounding interest is a marvelous thing,
It
but
is
it
a
also
beautiful thing.
loses money quickly, right?
Mm-hmm.
And so there are a lot of people that are taking money out of markets that are going to be vulnerable over these next 6, 12, 18 months, and they're
Yep.
putting it into real estate. And it's a wise bet, especially in the Austin market.
Yeah. Absolutely. And and when we look at those price decreases and where they are, um, a number of those are obviously builders because there's so much inventory in the market right now. And since we are telling tales this week, I have to say it doesn't bother me even a little bit that builders are taking these price decreases because there was so much gouging in the past 2 years, in the way that things were being handled, that if Austin builders right now are taking a little bit of a bite, then I say go forth and conquer. And if you're not getting the margins, then you know what? You're sitting on a pile of cash after what put consumers through last year. And so many people lost so much when they were trying to work with builders, and not all the builders, but a number of them. So if they're hurting right now, then no problem on my side.
I see your point. Where I have an issue with it is for those homeowners that bought in those neighborhoods where they're
Yeah.
still building in,
Yeah.
and if they do need to move for one reason or another, competing against that builder with the brand new home as opposed to the slightly used home with the incentives that they are throwing out there, it's
Yeah.
really hard to compete as a seller. And so that's always been my concern with buyers buying new construction. Even in a hot market, it's never guaranteed.
Absolutely. And to your point, no matter what that market is, what the conditions are, if you are buying in a new subdivision and builders are continuing to build, and for some reason you need to move and it's a very short window, you are going to lose. You're going to lose.
It's a long-term purchase.
Of course.
It almost always is, but especially with new construction. You
Yeah.
don't want to be buying and then having to sell before they're finished with the phase they're working on. And then
Mhm.
how many phases are there to come behind that? That's what somebody really needs to know as a buyer.
Yeah, I would agree with you 100%. Who else do we want to tattle on this week? Should we tattle on Jerome Powell? Because just real quick, like,
Wah, wah, wah. Yeah. So, I mean, we've talked about it a bunch of times before, right? Like inflation, it's a bad thing. We hadn't gotten control of it, we meaning the Fed, and now the Fed is really trying to get control of it. So what they're doing is they're tightening monetary policy. They're both raising the overnight lending rate. So just think if you're a JP Morgan, if you're a Goldman Sachs, you can go to the Federal Reserve and you can borrow money overnight into the tune of millions and billions of dollars. And you can borrow it at the lowest percentage out there in any market, right? For 24 months, that was at 0 to 0.25%.
okay.
Those rates are now at around 3.37, 3.75, if I remember right. But they are basically steadily increasing that overnight lending rate, which really restricts the amount of capital in the economy. At the same time as they're doing that, they're also reducing their balance sheet of the assets that they actually hold. So, little known fact, the Fed was the biggest buyer of mortgage-backed securities, which is really the reason why mortgage rates came down. They basically
Mhm.
brought up the market to the point where rates came down into the twos. That's what they were doing in post recession when they kept rates in like that 4.25 area. They were
Mhm.
buying enough mortgage backed securities and basically exchanging money overnight to keep rates that low. And so what they're doing right now is basically raising that overnight lending rate. And they're also starting to go from biggest buyer of mortgage backed securities to buying less.
Yep.
And really, we're not seeing the demand of other investors stepping in.
Mhm.
We know the chances of the Fed doing what we all hoped for, which was a soft landing, the chances of that are down in the gutters. And
Gutters.
so what the market is anticipating is a continuation of the pain until we get past it. We get the confirmation that inflation is down, unemployment starts going up,
Mhm.
and wages don't go up as much as they have been, which we could argue about that wage inflation all day, right? Um, but so there, once we see that, that means we're not only in a full recession at that point because it's debatable whether we're in one right now already or not. But it's also where the Fed will step back in to start stimulating the economy to get out of that recession. And so that is what the market anticipates. And so they don't want to buy a 7.5% mortgage, because they know in 18 months that mortgage could be 5.25%, and they're not making money on that investment for about 2.5, 3 years. That's the time where we all think market rates are going to come back down. And so it's throwing the entire dynamic of how it all works and keeps everything stable. It's throwing it all out of whack, right? Yep. That's what's going on. That's my biggest grievance. It's the Fed seems to be lack complete self-awareness in the fact that whatever actions they do, we don't actually see those real world consequences and actions like manifest for 60 to 90 to 120 days. And so we still haven't truly felt the impact of the last meeting and those increases. And so we won't feel the impact of these increases for another 90 to 120 days. And so that's what they seem to not understand. And that's what the market is begging of them right now, is become self-aware. Understand that your actions literally change the direction of not just the greatest economy in the world, but then all of the economies around it.
Yeah. So globally, we are definitely seeing the impact of that, and we will continue to see the impact of it. So let's pick this up next week, Mark. And
all the challenges create opportunities, right? Like all of the challenges that we talked about, there's an opportunity that somebody can take advantage of and create lifetime generational wealth through what is happening today and what is coming today. And so with all the bad around us, you got to use that, you the viewer, to what do you need to take away from it, and how can you implement what we're talking about to actually win and take that next step for you in your life.
Yeah, and what I would say is I wouldn't label it bad. I would label the fact that we need awareness and determination of what our actions are given the current state of affairs. So if you tell yourself it's bad, then it's bad. If you tell yourself it's good, it's good. So I'm not even going to call it that. What I'm going to say is there are opportunities for everyone, because there really are. Not everyone should buy a house right now. Not everyone should sell a house right now. And we all need to make decisions. And so get yourself educated, right? And get an understanding of what's happening in your own backyard, what's happening into a backyard you may consider that you are moving to or are moving from, so that you can make the best economic decision for you and your family.
Hey, next week, Jennifer, I want to talk to you about how a financial planner buddy of mine told me equity is his least favorite and laziest asset for somebody to have.
Oh, I look forward to diving into that with you.
That's going to be a good one.
All right. Well, with that said, my name is Jennifer Goodman, realtor here living in Austin, Texas. And I'm here with
Mark Koretsky, Movement Mortgage, here in Austin in spirit, but up here in DFW physically. If you guys need anything from us, just give us a shout.
Yeah. And if you have anything that you want to share with us in terms of tattletaling, we want to hear what you have on the go. What are you hearing in the market? What are you experiencing? What are your thoughts? We would love to hear from you. Comment down below, and we'll catch you next week. Thanks so much for tuning in, everyone. Bye.